Hi, this is Brent with Trade Therapy. Welcome to the Trading Couch. This week's Clarity Spotlight dove deep into the discretionary sector, where consumer spending is sending mixed signals and the charts are telling a very different story than what the headlines are. This week, we started our top-down analysis with the overall market SPY because our focus this week was on Amazon. Every week in Clarity, we take a particular trade like Amazon, and then we do top-down analysis. So we start with the overall sector influences that may be able to have an impact on Amazon if we recognize any weakness or strengths within the overall influences from a sector and market standpoint. We then go in and look at individual tickers, peers. In this case with Amazon this week, we did Tesla and Home Depot. Again, looking for signals, looking for trends that might match up what we saw in the overall sector, which we would then be on the lookout for when we got to Amazon. This week started with the overall market, Amazon being in the Mag 7. Really, anything that's going to impact Amazon is going to first show up in the overall markets. When we look at SPY, we see elevated volume here over the past couple of weeks. We can see that SPY is running into some resistance, but we are entering into the seasonal volatility period. August, September, October is when we need to be on the lookout for profit taking. We have seen a big run here, so it's not surprising to see some signs of profit taking. If we take a look at XLY and the consumer discretionary sector, we can see that XLY is in a similar position, has been on a big run since its low in April and getting up into a range where we should expect to see profit taking up against this 786 Fibonacci level. If you're not familiar with these Elliott wave labels and or the Fibonacci or the volume profile, we go through that every week. Clarity is presented in an educational manner so that our members can slowly learn these advanced concepts. We don't expect them to become experts, but we do expect them to be familiar with the basics. And when we apply the basics, we're able to identify tremendous opportunities, like back in April when we saw that XLY was putting in a bottom after this three-wave leg down here. We saw it putting in a bottom. We saw the bullish or positive divergence, and that's what led to this big trade opportunity here. Applying that same analytical theory, we do see a potential for an ABC wave down here. There is a gap that would basically take about 50% out of this move right here on a retracement, which is very common. So we went into depth about that. We discussed Tesla at length in this ascending triangle and the potential for it to break out of this. What we don't see in Tesla is signs of profit taking like we saw in the overall market in SPY and in XLY. So that tells us that from an institutional strategy standpoint and from the development of this overall structure, we think that there's a better chance of it breaking out to the upside. We discussed targets for a potential bullish move coming out of Tesla. Home Depot was another one of the peers that we looked at from the consumer discretionary sector, and this big cup and handle pattern that had developed. We discussed the cup and handle patterns and how it fits in nicely with wave 5 and how wave 5 often represents the right side of the cup. We talked about the potential entries and exits that we were considering for a trade within Home Depot and how the bottom of this handle provides nice risk as long as we don't see further development into an ABC structure here. Before we got to Amazon, which we framed as the forgotten mega cap, price has been coiling just under major resistance here. The all-time highs, we did see the development of a low again that we applied the advanced technical analysis to back in April. We did see that ABC wave develop here. We talked about the divergence and we talked about the possibility of a recovery trade coming out of Amazon. And obviously we did see that develop right here. Now we're seeing the potential for a retracement, roughly about 50% there. These are the types of things that we cover every week in Clarity. We talk about institutional positioning. We talk about Wyckoff and Elliott wave and the logic behind it. We do discuss actionable trade levels, including cascading stops and entry strategies. We talk about upcoming monetary policy shifts that could reignite certain sectors and how to spot early confirmation signals when they do. If you want the full breakdown, the charts, the scenarios, and the trades, we rotate about 35 to 50 of them, running through 5 or 6 of them a week. If you want to learn more about institutional strategy and what drives the markets and not just chase headlines, there'll be a coupon code up. Thanks for your time. We'll see you next week.